Is the DXY, the dollar index, preparing for the reversal price behavior? We are seeing the DXY unfolding into this potential or eventual inverted edge and shoulders pattern formation. Let's see how the market will unfold during this week. Welcome to the channel. My name is André Cardoso. It's always a pleasure to share my views for the Forex market, commodities also as gold, silver and crude oil. We will also observe the SPX 500, the German DAX, the BUND and the bonds. Some of the patterns the market is forming and some of the price structure, the support and resistance levels, the ranges that we are facing in some of these active. So let's start with the DXY as usual, the captain of the ship. We are seeing, as I was saying at the beginning, we are seeing the formation of this eventual edge and shoulders pattern formation for the DXY. Of course, as always, we need to wait for the confirmation above the neckline. So basically, we have the DXY with the neckline at $99.39 or $99.40. And if the price breaks above the resistance, I anticipate a move, 0.5 move towards 99.88. That's the first target level, or let's say the default target zone for the inverted edge and shoulders for the DXY. Then, of course, the market may start to, to squeeze higher and try to reverse this bearish momentum. But you have always default target level. And for the edge and shoulders pattern formation, it lies at 200% Fibonacci extension level in this situation at 99.88 for the DXY. Of course, inverted with the DXY, we have similar and inverted situations and inverted patterns for the cable, the HOSI, the fiber, the kiwi. All of them also may start to suggest or to start to favor the formation of reversal price behaviors. In this case, for the pound, we can see this as a potential edge and shoulders, neckline at 135.07. If the price breaks below the support, we can anticipate a move towards a 200% Fibonacci extension, 133.95 below the previous support, and actually a retest or an approach to the previous the previous monthly resistance level. The same may happen for the euro versus the Aussie, the fiber. We have support at 113.71. If the price breaks below this support level, we can start to anticipate a move towards a 200% Fibonacci level, 112.72. That's also the eventual edge and shoulders pattern for the fiber. The Aussie, not the edge and shoulders pattern formation, but it can start to unfold what we may call the, let's say, the eventual double top. That points to 64.79 as a neckline and a validation point for that pattern. If the price approaches this support level again, that's a pattern to consider also for the Australian dollar. Something to consider also for the Kiwi, the formation of the right shoulder at this point at the 78.6% Fibonacci level. We are at the very limit to form that right shoulder. Usually I use the 78.6 as my, as a price zone to consider the limits to form the right shoulder. So if the price extends above the 78.6, I start to ignore that possibility. This may also work for the Kiwi, the edge and shoulders pattern formation. We wait for the for the clear violation of the support level at 665, basically the most recent fractal support level for the Kiwi. If the price breaks below these levels, we may see a move towards the 200% Fibonacci extension level. If that happens, this is an exercise that we can do with all of those head and shoulders pattern formation. If that pattern confirms, so if the price breaks below the support and we are far away from those levels, of course I'm just speculating, but if somehow the price confirms the head and shoulders pattern, we may start to anticipate not only the bearish momentum, the bearish retracement or a pullback for the pair, and then later the formation of a bullish crab pattern projected in convergence with the default target zone. So basically something to pay attention also, just if then. So if the price breaks the support, confirming the edge and shoulders, then we anticipate a bearish momentum. And if the price approaches the default target level, a lot of ifs actually, since we are very far from confirming the edge and shoulders pattern formation. So let's wait. Dollar versus the CHF also confirming an extended period of consolidation. We are inside a major range, or let's say a range between resistance at 82.49, 81.57 as support. These may unfold into a, probably a triangle there. Let's wait and see how the market will unfold. Levels to consider actually lies on those fractal levels, resistance and support levels. If the price breaks the support, it's also one of the possibility. If the price breaks this trend line support and eventually the fractal, the horizontal support at 81.57, it may trigger the approach to the previous support level. The same may happen if the price breaks above the resistance. It may trigger an approach to this daily fractal resistance, or even higher to the weekly resistance above. So basically pay attention to the structure for the dollar versus the CHF, nothing else to report. The same happens for the dollar versus the Canadian inside what we may call a descending wedge pattern formation. I will not be surprised to see the pair approaching this trend line support again and eventually breaking below it, just to achieve this 135.87. That's the golden Fibonacci extension level, and that's a level where I want to see the pair being pushed to in order to bounce after achieving these levels. So I want to see the price approaching the golden Fibonacci extension and starting to bounce after achieving those levels. The same may happen for the dollar versus the Mexican peso. I need to increase my time frame to show you this pattern. Actually, this was one of the patterns that I was anticipating during the last weeks, even months, after breaking below this weekly fractal support level 19,836. We saw the violation of this support, and once I saw that break below the fractal, we start to project patterns below that support. One of them, the bullish crab pattern at the golden Fibonacci extension, finally completed for the dollar versus the Mexican peso. So I will not be surprised that at some point the price starts to bounce towards the 38% Fibonacci retracement level. The dollar versus the Japanese yen, nothing very specific to say. We're still facing pressure to the downside, and in this case in the form of a trend line resistance. One of the patterns that I'm starting to pay attention to, the possible break below support levels and the formation of a bullish alt-bat pattern right below the support level. So we need to wait for that to happen, wait for the breakout of this trend line support, eventually the horizontal support at 142.50, 142.35. A break below this level may trigger a retest or an approach to the previous fractal support, and eventually the formation of the bullish alt-bat pattern just below the fractal support level. Euro versus the Japanese yen already completed the bearish shark pattern, actually the bearish crab pattern at the golden Fibonacci extension level 165.16. We expect a retracement at least towards the 38% Fibonacci level 164.33. So we already saw this shy retracement already printed after the formation of the pattern. The pound versus the Japanese yen, approaching the highs or retesting the previous highs already. We have a bearish alt pattern at 196.77. If the price completes, we will expect a drop towards the 38% Fibonacci retracement level back to 195.21. So wait for the formation of the bearish alt pattern above, which still possible. Aussie versus the Japanese yen, very much the same expectation of continuation of a move to the upside and eventually the formation of this bearish bat pattern at 95.19, 88.6% Fibonacci level. If that pattern completes, again, we will expect a retracement back to the 38% Fibonacci level. The New Zealand versus the Japanese Japanese yen, multiple situations to consider here. First of all, the bearish butterfly pattern, 127% Fibonacci extension level. If that pattern completes, we will expect, or we can expect or anticipate a retracement back to 87.04. So that's equivalent to a 38% Fibonacci retracement level. We also know that sometimes the butterfly pattern extends into a crab pattern, and that's something that can happen. Actually, both patterns can form. We may see a retracement after the formation of the butterfly, a pullback, and then the price moving higher to complete the crab pattern above, and and then we see another pullback. But the Fibonacci levels that we need to consider: 127% Fibonacci extension as a bearish butterfly pattern, and then the golden Fibonacci extension above at 89.65. So basically pay attention to these levels initially at the 127% Fibonacci level, which may trigger this pullback towards the 38% Fib, and then from the same may happen from the golden Fibonacci extension. And if you track that possibility, you will see the perfect convergence between the default target for the pattern, the 38% Fib, and the previous weekly fractal resistance level. That let's say the crab pattern completed at the golden Fibonacci extension will favor a retest of the weekly fractal resistance, which may work as support or element of support if retested. Let's jump into the pound versus the Aussie. We are seeing the formation of a symmetrical ABCD pattern for the pound versus the Aussie, completed at 2.0775. That's a symmetrical pattern already completed for the pair, so I will expect a bounce and eventually a move towards the 38%, the 38.2% Fibonacci retracement level. The pound versus the New Zealand, it's facing support, and it's facing structure support actually in the form of a fractal printed at 2.2375, but also this kind of an internal or a lower degree ascending trend line supporting this triangle or this descending wedge. Actually a triangle right there. So basically I will expect at some point the violation of the support and the continuation of a move to the downside. If that happens, we have already a bullish alt bat pattern projected below the support. We need to wait for that pattern to form. We are far away from those levels, but consider the eventual break of support, which may trigger momentum to the downside. And if the price approaches the previous support level, pay attention to the formation of the bullish alt bat pattern at 113% Fibonacci extension level. We have also gold, and pay attention to the time frame. By the way, we're still on a lower time frame events. Gold formed support at 32.93 yesterday at the opens, and we saw a nice bounce. I was expecting the formation of a bullish crab pattern at the golden Fibonacci level, and this is something that's still possible. I will not be surprised to see you know, gold at some point being pushed lower to this golden Fibonacci level, and that may also, you know, complete the sequence or complete the pattern that I projected before. So this is it's still possible to see the formation of the bullish crab pattern on gold that I projected yesterday at 32.82. Of course, if the price starts to, actually, if the price recovers the previous support level, that will start to vanish with the possible or the possibility to form that sequence. And again, time frame chart, it's important to note because we will change that for silver. Silver, we are fighting this 36.30. As you can see, we are facing this possible element of resistance. This is a 127% Fibonacci extension level, and that confirms the formation of a bearish butterfly pattern. So after the formation of this pattern, we anticipate a retracement that can reach the 38% Fibonacci level. That's a default target for that pattern. So that being said, that suggests a deeper pullback on silver back to 33.25. That's a default target for the butterfly pattern on silver higher time frame, as I'm showing you here. Decreasing again back to the 2 hours time frame chart to show you the crude oil bearish shark pattern projected at $65.48. The golden Fibonacci extension is just above the recent highs and recent resistance level. The formation of the bearish shark pattern will favor the pullback at least towards 63, 62.80. That's a default target for the shark pattern, the 50% Fibonacci retracement level. SPX 500, let me increase my time frame into a 4 hours time frame chart. We saw the SPX unfolding into this ascending wedge pattern formation. So at this point, I'm expecting the continuation of the move to the upside. I'm just waiting for a breakout of the structure without ignoring, of course, if the price breaks below the support 59.19, 59.20. If the price breaks below these levels, it may force or favor, let's say, the retest of the weekly fractal resistance again. This fractal back from 2 months ago, so basically back to these 57.94. My opinion, and that's just my bias, more upside momentum for the SPX 500. Even though we have the German DAX facing resistance and starting to unfold in what we may consider, let's say, the eventual edge and shoulders pattern formation. I'm seeing this as a potential left shoulder, the head, the right shoulder, and we are facing the neckline or the support line for that pattern. So if the price breaks below these levels again, or if, let's say, if the price recovers this 24,149, we may see the DAX, the German DAX, being pushed back to this 23,900, basically the 200% Fibonacci extension level, also for the German DAX. So basically, you are facing the neckline of an edge and shoulders pattern. So until then, the market may favor momentum, the more bullish trend. Okay, so we need to confirm this violation of the support level. Don't try to anticipate without that happen. Then we have the BUND, still possible to form the bullish crab pattern, actually the bullish shark pattern, 109.20. Golden Fibonacci extension, very similar as gold. We just need a new lower low to complete this sequence. Golden Fibonacci 109.20 for the BUND. We have also the BUND inside what we may consider a consolidation channel. Nothing to do here unless the price breaks the support level. I will anticipate, an approach to the previous support. And of course, if the price breaks above the resistance, I will consider the continuation of the momentum to the upside. Eventually it will start to unfold or start to unfold into a into a ascending channel. Something to consider also if somehow it starts to break the resistance level. Bitcoin completed the bullish alt-bat pattern 100k 862. I was expecting a deeper pullback towards the golden Fibonacci extension, at least to achieve this 38% Fibonacci level. The market has found support at this 100k 458. So the we have Bitcoin facing or actually approaching the 61.8% Fibonacci level, and we have at the same point we have the Ethereum back to the neckline, where we may consider the neckline of the head and shoulders pattern formation. So basically, if the price breaks below this level of support, 2396, that's the actually 2386, that's the recent support for the Ethereum, I will expect a drop towards $2,212. So that's a 200% Fibonacci extension level. That's a default target for the head and shoulders pattern formation for Ethereum. Of course, dear friends, some of these patterns will never unfold. The price will reject the idea to break the necklines, will offer support for more upside. Some of them may trigger, some of the harmonic patterns may form, some may not. So always pay attention to the levels. Don't try to anticipate. You are putting yourself in a very risky situation. And if you repeat that process over and over again, I assume you will fail trading the financial market. So that being said, that's all for today. I hope you enjoy. I hope you take some useful information that helps you in your journey, at least with a different market perspective. And that's all for today. I hope to see you in the next video. See you there.